So good day everyone. So now in this video we are going to discuss management accounting 2025 June suggested answers. So first let's start with section A. So period of loss relevance is the dash of the evolution of management accounting. So we have four stages. In that period of relevance is third stage. So answer is C. So process of cost allocation under activity based costing. So under activity based costing, what is the process? So what we will do first, we will be identifying the activities. So what are the activities involved? So based on that activities, we will be analyzing what are all the cost. So for which activity, what is the cost driver? So we will be identifying cost drivers. Based on that cost drivers identified, we will be allocating cost to cost objects. So option C is the right answer. So AXR Limited, a manufacturing company, has a break-even point when sales are 20 lakhs and fixed cost is 8 lakhs. If the selling price is 5 rupees, the PV ratio will be. So they have given break-even point. So what is the formula for break-even point when it is mentioned in rupees? So break-even sales is equal to fixed cost divided by PV ratio, right? So here break-even sales is 20 lakhs. Fixed cost is 8 lakhs. So what will be my PV ratio? So PV is equal to 8 lakhs divided by 20 lakhs. So you will be getting 40 percentage. So option B is the right answer. The difference in total cost that results from two alternate course of actions. So if that means here the trick is two alternative course of actions. That means, say for example, if I am calculating at 50% capacity, so the cost for 50% capacity, let's assume 10,000. If it is for 60% capacity, it is 12,000. So this is two alternate course of actions. So what is the difference between this 2000? So what we will be saying, this is differential costs. So difference between two alternative course of action is called differential cost. A new product is expected to generate the following profit or losses. So we have three levels of demand: high, medium, low, and we have given profit or loss based on probabilities. What is the expected profit from the new product? So, what is the expected profit or loss? So, whenever we are having a probability, we need to multiply that probability with profit. So, if in case of high demand, how much I will be receiving 1 lakh, but I have only probability of 10%. So that means there is a chance of getting 1 lakh into 0.1, 10,000. So if it is medium, 50,000 into zero point 0.5, that means we will be receiving 50,000. La half, that means 25,000. So low, here we are incurring loss. So 20,000 into zero point 0.4, 8,000 loss. So the sum of all this is said to be expected profit. So 35 minus 8, so 27,000 will be my expected profit. So option C is the right answer. Division A transfer is output to division B at variable cost. So division A is transferring to division B. So that means this is transfer pricing. So it is transferring based on variable cost. So once a year, A charges fixed fee to B, representing an allowance for A's fixed cost. So only once in a year, we are charging fixed cost. So this type of pricing, transfer pricing system is commonly known as. So this is, we have variable cost plus once in a here one time we will be charging fixed cost, right? So here we have two, here my tariff is classified as two parts, right? So the answer should be two-part tariff pricing. So this is the same you will be having in your question textbook, the theory part, and also the same question will be available in your objective textbook. In textbook itself, back we will be having objective. So it is many of the questions. It is observed that many of the questions we have received from objectives also. So students, so please don't ignore the objectives which is given in your textbook material. So seventh one. Let's move on to next question. ABC Limited uses standard costing system. The following information pertains to direct labor for product X. So this is relating to labor variance. Then standard rate per hour 8 rupees, actual rate 8.4, standard hours allowed for actual production 2000 hours, labor efficiency variances 1600 hours. So now they have given labor efficiency variance. So I want to apply formula for labor efficiency variance. So what is the formula for labor efficiency variance? So what it means efficiency? Efficiency is based on how if I'm giving standard hours to produce one unit, then what is the actual hours taken by the labor? So based on hours only that variance will be arrived. So here the difference is standard hours for actual production minus actual hours into standard rate. So here LEV is 1600 adverse. So I am writing it as minus 1600. Standard hours we have 2000 hours. Actual hours I don't know. So the question is asking to calculate actual hours. So AH I am keeping as AH. Standard rate is 8 rupees. So minus 1600, 2000 into 8, 16,000 minus 8 AH. Now I am bringing this right hand side from left hand side. So 8 AH minus 8 AH will become plus AH. 16,000 plus 1600. So 17,600. So AH is equal to 17,600 divided by 8. So you will be getting 2,200. So option is actual hours worked is 2,200. So option A. The term budget slack refers to. So what does mean by budget slack? Actually, it is between overestimation of cost. That is deliberate between overestimation of cost and underestimation of revenues. That means if a manager wants to show it the variance in favorable condition, what he will do, he will show the cost. He will be if say for example, if my estimate of cost is coming as 100 rupees, but I will portray as 120 rupees. So what will happen if I'm giving 120 rupees as estimate at loss? That actual cost will be 100 only. So I will project as that variance is resulting in favorable. In case of revenue, what I will do, if I'm expecting 100 rupees as revenue, I will be giving a projection of 90 rupees only. So again, here I will be projecting a favorable variance. So whatever I expected, I'm earning more. Like that, I can project, right? So budget slack is deliberate overestimation of cost and underestimation of revenue in a budget. So option D is the right answer. Ninth question. Which one of the following characteristics is not associated with traditional responsibility accounting? So, which is not responsible with traditional. So, here most appropriate will be attempts to control the process. This won't form part of traditional responsibility accounting. So let's move on to next question. Following ratios have been calculated for a company. So gross profit ratio, operating profit margin, gearing ratio, asset turnover ratio. Now they have asked what is the return on capital employed for the company. So how we can calculate return on capital employed? So one is we will be calculating return divided by so one formula we will be calculating using return. Here we have asset turnover and all. We don't have that exact amount of return or capital employed, right? So that formula won't be applicable. So another formula to calculate capital employed will be your operating profit margin into asset turnover. So operating profit margin is 28% into 65% is my asset turnover margin. So you will be getting 18.20. So next question is XY Limited makes a special gadget for the car it manufactures. The machine for the gadget works to a full capacity and incur 15 lakhs and 40 lakhs respectively as variable and fixed cost. If all the gadgets were purchased from an outside supplier, the machine could be used to produce other items which would earn a total contribution of 25 lakhs. So if I'm not producing the parts for manufacturing, I can use it for another product. So that means I will be earning 25 lakhs as contribution. So in this case, this is treated as opportunity cost. So what is the maximum price the XYZ Limited should be willing to pay to the outside supplier for the gadget? So if I want to purchase from outside, what is the maximum price? So, but even if I'm not producing, there won't be any change in fixed cost. So in this case, the maximum price which I can offer is my variable cost plus opportunity cost. So variable cost here is 15 lakhs, opportunity cost is 25 lakhs. So total comes to 40 lakhs. So option A is the right answer. Let's move on to next question. A factory is making certain product where learning curve is 80% and 90% apply respectively for two equally paid workers. So two workers A and B are there. So their learning curve is 80 and 90%. Which of the following statement hold good for the factory? So now the labor cost will be more for the worker whose learning curve is very high. Here, if say for example 90%, so labor cost will be high for B. So let we analyze the options. The labor cost of manufacturing the food product will be more for A. Obviously, for B only it is higher. So option A is wrong. The labor cost of manufacturing the fourth product will be more for B. So this is the right answer. So the labor cost is the same. Obviously, it won't be same. So nothing can be said about the specific product. So here, by analyzing the options, you can find it as B will be the right answer. Which of the following would be considered an operating asset in return on investment computations? So which one will be considered as operating asset? So in this scenario, accounts receivable will be considered as operating asset. So option C. Let's move on to 14th question. In a control report of Department X, it is mentioned as indirect materials 1000, indirect labor 900, overtime charges 100, depreciation on equipment 500, allocated factory overhead 38% of factory space, allocated overhead of repair shop 1200. Out of the 62% repairs in repair shop done by the Department X. So out of 1200, for department X contribution is 62 percentage. So determine total cost treating department X as a responsibility center. So in case of responsibility center, what all the cost in which I am having control will be treated as total cost. So here I have control over this indirect materials 1000, direct labor 900, overtime charges 100, depreciation on equipment 500, but this allocated factory overhead, I don't have any control over this. So, anyways, whatever my performance will be, this overheads is going to be getting allocated to my department. So, I don't want to include this allocated factory overheads. Allocated overhead of repair shop. So, in 1200, my part is 62%. So 1200 into 62 percentage, 744. So total comes to 3244. So here the options is not matching with 3244. So the next nearest is 3200. So option A is the right answer. So the value of coefficient of optimism is needed while using the criteria is realism.